Stop everything you are doing right now. Because Michael Saylor, the man who has staked his entire corporate identity, his reputation, and billions of dollars of investor capital on a single conviction about Bitcoin, just filed paperwork with the United States Securities and Exchange Commission confirming that between March the 2nd and March 8th of this week, Strategy purchased 17,994 Bitcoin for $1,280 million at an average price of $70,946 per coin. And at the exact same moment, a pattern that has predicted Bitcoin's exact cycle bottom in every single market cycle for 15 years, without failing once, just fired. If you have ever wondered what it looks like when the smartest money in the world acts on a signal that retail investors are completely ignoring, you're watching it happen right now. Let me start with the Saylor purchase because the details matter more than the headline. According to the Form 8K filed directly with the SEC, Strategy acquired 17,994 Bitcoin between March the 2nd and March 8th, spending approximately $1,280 million at an average purchasing price of $70,946 per coin. This brings Strategy's total Bitcoin holdings to 738,731 Bitcoin, acquired for a total cost of $56 billion. The company's average purchase price across its entire stack now stands at $75,862 per coin. Now I want you to sit with those numbers for a moment. Saylor's average cost across his entire Bitcoin position is $75,862 per coin. Bitcoin is currently trading at $67,500. That means Saylor's entire stack is currently at an unrealized loss. Every single Bitcoin he has ever bought is underwater right now on paper. And what did he do this week? He bought $1,280 million more. He did not panic. He did not reduce his position. He did not hedge. He bought more at these prices with $1 billion. That is not the behavior of someone who is worried about losing money at current levels. That is the behavior of someone who has done the mathematics on what Bitcoin is worth in 12 to 24 months and has concluded that $67,000 to $71,000 is not a price to be afraid of. It is a price to accumulate aggressively. The company still has over $6.7 billion available for issuance under its stock programs and tens of billions available across its various preferred stock tiers. Saylor has not run out of ammunition. He has barely started. The infrastructure he has built to continuously acquire Bitcoin, the ATM stock programs, the preferred stock tiers, the convertible notes, all of it is designed to keep buying Bitcoin at every price level as long as he believes the long-term value is dramatically higher than the current price. And he just demonstrated with $1.28 billion of evidence that he believes exactly that about the $67,000 to $71,000 range. Now, let me show you the pattern that every serious Bitcoin analyst is talking about today, and that almost no mainstream financial media is covering correctly. It is called the 23-month cycle, and here is the historical record. Bitcoin hit its first major all-time high in November 2013. Exactly 23 months later, October 2015, Bitcoin hit its cycle bottom. The recovery that followed took Bitcoin from that bottom to $20,000 by December 2017. Bitcoin hit its next major all-time high in December 2017. Exactly 23 months later, November 2019, Bitcoin bottomed out. The recovery took Bitcoin to $69,000 by November 2021. Bitcoin hit its next cycle peak in November 2021. Exactly 23 months later, October 2023, Bitcoin found its bottom, and the recovery from that bottom took Bitcoin all the way to $126,000 by October 2025. Now, Bitcoin hit its most recent all-time high in October 2025. 23 months from October 2025 is September to November of 2026. But the signal fires as we approach that window, and right now in March 2026, we are entering that exact signal zone every single cycle, without exception, 23 months from the peak. A bottom, followed by a recovery to a new all-time high. 4 cycles, 4 data points, 0 failures. And Saylor just spent $1.28 billion this exact week. That is not a coincidence. That is pattern recognition, backed by billion-dollar conviction. The pattern also aligns with something even bigger. Bitcoin is currently replicating the exact same bull market structure that gold executed in the 1970s, a period when gold went from $35 per ounce to over $800 per ounce in less than a decade, as institutional adoption accelerated and the dollar's gold backing was removed. The parallel to Bitcoin's current position, where institutional adoption is accelerating, ETF infrastructure is fully live and government strategic reserves are being built, is a comparison that the most serious financial analysts are making with increasing frequency. Now let me bring you the macro development that moved Bitcoin today. President Trump has hinted at a potential resolution in the ongoing Iran conflict. and Bitcoin immediately responded. The price surged to $67,579, up nearly 1% on the day, while trading volume exploded 53% to $37.89 billion. The total crypto market cap reached $2.33 trillion on this single development. A potential Iran war resolution is massively significant for Bitcoin for two reasons. First, it removes the geopolitical risk premium that has been suppressing Bitcoin's price for the past 2 weeks. When institutions factor geopolitical risk into their models, they reduce exposure to volatile assets, including Bitcoin. The moment that risk premium begins to deflate, when peace signals emerge, capital flows back into Bitcoin with force. Second, an Iran war resolution would stabilize oil prices, reduce inflation pressure, and give the Federal Reserve more room to consider rate cuts. Lower rates have historically been positive for Bitcoin. The combination of geopolitical de-escalation and potential Fed dovishness is exactly the macro environment that Bitcoin bulls have been waiting for. Let me now give you the complete technical picture heading into the most important 8 days of Bitcoin's 2026. On the upside, bulls need repeated acceptance above $71,500 and then above $72,000, where last week's move began to stall. A sustained close above $73,300 would technically invalidate the current bearish pattern entirely and open the door to $75,000, $79,000, and $81,000 targets. On the downside, the critical line is $66,900. If Bitcoin falls back through $68,000 and then starts spending time below $66,900, the structure changes fast. The lower channel between $66,900 and $61,700 reopens, and the conversation shifts from consolidation to renewed weakness. A decisive break below $66,900 would likely reactivate the head and shoulders projection, potentially sending Bitcoin toward $59,500. For now, the combination of low leverage, muted spot selling, and inactive whale wallets suggests Bitcoin may remain in a tight range between $65,600 and $70,800 as it waits for the FOMC trigger to arrive. Now, let me give you the metric that professionals use to identify cycle turning points. And right now, it is flashing one of the most historically significant readings of the past 3 years. 43% of Bitcoin's entire circulating supply is currently sitting at an unrealized loss. 43%. That means nearly half of every Bitcoin ever mined is held by someone who paid more than $67,500 and has not sold. In prior cycles, this metric reaching the 40 to 50% range has historically marked the zone of maximum pain and maximum opportunity. It is the level where long-term holders stop selling because they refuse to realize losses, and where new buyers begin accumulating because the risk-reward has shifted decisively in their favor. Every major Bitcoin bottom in history has been preceded by this metric reaching these levels. And then there is the supply story that almost nobody in mainstream financial media is covering. Bitcoin's circulating supply has reached 19,999,775 coins. The 20 millionth Bitcoin could be mined today or tomorrow. After that milestone, only 1 million Bitcoin will ever be produced in the history of the universe. 1 million coins for 8 billion people. 1 million coins for hundreds of institutional ETFs. 1 million coins for corporate treasury programs multiplying across America and beyond. 1 million coins for a United States government that has already designated Bitcoin as a strategic national reserve asset. Standard Chartered projects, $143,000 to $189,000 for Bitcoin in 2026. CoinShares, projects $120,000 to $170,000 by year end. Past performance never guarantees future results, but the structural foundation beneath these forecasts is built on real supply and demand mathematics that do not require opinion to understand. The FOMC meeting on March 17th and 18th is 8 days away, and it is happening at a unique macro moment. In February, the United States economy lost 92,000 jobs and the unemployment rate rose to 4.4%, the most significant labor market deterioration in over 3 years. This puts Jerome Powell in the most difficult position of his final months as Fed chair. His successor, Kevin Warsh, is known as a monetary hawk. The market is watching Powell's every word for signals about what the transition means for rates and liquidity. At the same time, inflation is still above 2%, giving the hawkish camp arguments to hold steady. Scenario 1, Powell acknowledges the jobs weakness and hints at May or June rate cuts. Bitcoin could potentially break above $73,300 and begin its move toward the upper targets. Scenario 2, Powell reaffirms higher for longer and dismisses the jobs data. Bitcoin may retest $65,000 support immediately. Both scenarios are live. The on-chain data favors a breakout, but macro always has the final word. Here is the action framework. If you are a long-term Bitcoin holder, Saylor just gave you the most powerful data point available. The man with the most to lose if Bitcoin goes lower just bought $1.28 billion worth at prices above where you are sitting right now. Watch $66,900 as your line in the sand. Above it, the institutional thesis is intact. Below it, on heavy volume, reassess your time horizon. If you are a newer ETF investor, simplify to two numbers after March 18th, Bitcoin price relative to $66,900, and weekly net ETF inflows. Positive inflows plus price above support equals thesis intact. Heavy outflows plus price below support equals a genuine reassessment moment. If you are on the sidelines, the 23-month cycle has never fired without being followed by a significant recovery. Saylor has never bought $1.28 billion in a single week without having done the math on where price is going. These are not guarantees, but the convergence of a historically perfect pattern, a billion-dollar institutional purchase above current prices, geopolitical de-escalation signals, and an FOMC meeting 8 days away represents one of the most data-rich decision moments Bitcoin has offered investors in all of 2026. Your decision, your research, your risk tolerance, always. 8 days. The 23-month signal, Saylor's $1.28 billion bet, Trump's peace signal, the FOMC countdown. Every piece of data is converging on this exact moment. Make sure you are watching when it resolves. Subscribe right now and hit the notification bell immediately. On March 18th, the moment Powell finishes speaking, this channel goes live with a complete breakdown of every word, every implication, and every price level to watch in real time. You cannot afford to see that video hours late, after the market has already moved. Turn on notifications now. Comment one word, bull or bear. Where do you think Bitcoin goes after March 18th? And share this video with every Bitcoin holder you know today. The 23-month cycle has never failed. Saylor knows it. BlackRock knows it. Now you know it too.